This is David Goldman, Asia Times Deputy Editor, speaking to you from New York City on April 20th. JP Morgan Chairman Jamie Dimon, America's most famous banker, made a remark which went, I think, underappreciated a couple of days ago in his annual letter to shareholders, stating that banks are playing an ever increasingly smaller role in the financial system. That's a remarkable piece of anti-marketing by JP Morgan's chairman. And this, he said, is because of competition from fintech. Now, what this means for the US dollar and the United States is that as China comes to dominate the next generation of fintech, particularly in global supply chain management, China's digital currency, the global digital yuan, and China's fintech will come to replace a great deal of the banking system. And this will have profound strategic consequences. Morgan Stanley analysts published a paper today by their economics department stating that in the most disruptive case, banks could lose their deposit base to central banks issuing digital currencies. In other words, you don't need to keep your money in the bank if you can make digital payments directly off your smartphone or a business to business. You don't require banks as an intermediary. And if you look at the chart, this has dire implications for America's international position because America is the provider of the world's reserve currency, the US dollar. There are $16 trillion worth of offshore dollar deposits. Most of these are used to finance international trade. That's more than half of all the offshore deposits in the banking system. Why should the United States provide most of the currency in the banking system in offshore deposits when it only accounts for 8% of global exports? And the reason is because in the current system, importers and exporters have to borrow and leave large deposits at banks to finance trade transactions. But the next generation of fourth industrial revolution logistics will give you complete information about the whereabouts of every product in the world, at what stage production it might be at, how it's being shipped, how it's being warehoused, where it will be delivered. And the combination of big data and artificial intelligence will allow just-in-time delivery and just-in-time payments. Fintech follows the fourth industrial revolution. And that's what makes the digital yuan such a formidable challenge to the United States, because as smart logistics and AI-driven global supply chains come to dominate, we're not going to need this mass of currency in the banking system. And because the United States is the largest provider of global bank deposits, the United States is most affected. Now, if the United States were not running $1 trillion a year current account deficit, and if it weren't borrowing 15 to 20% of its GDP to finance its domestic budget deficit, this might not be a serious problem, except, of course, for bankers like Jamie Dimon. But the volume of deposits in the global banking system, the $16 trillion plus about another $8 trillion in U.S. Treasury securities held by foreigners, that $24 trillion is cheap or zero interest rate loans to the United States of America at a point when the United States needs to borrow as never before in peacetime. That's a serious problem for the United States, and that's why the digital yuan and China's leadership in AI and big data is such a formidable challenge to the United States. So be afraid, be very afraid. This is David Goldman on April 20th.